Invested Agents presents Real Estate Action Live.
Yes.
We're going to do something different. Multiple guests answering a single question.
This will be a fun, fast-paced hour with amazing guests.
And that is how you're going to win all day, is to empower your people.
Too many agents are trying to figure out, well, how do I get my buyer's offers accepted? It's easy. Offer the highest price. It's not rocket science.
When you're a realtor or you're doing something in real estate, you have to flip the view of what you're looking at, and you start looking at what other people are doing.
So it's really just personality based, and then having people learn the ropes in an effective way.
Focus on just being there for people and providing value.
I don't regret what I did because it really made me hustle and work hard.
Better than we've ever been. We just had our first six-figure month. That 70K just jumped to six figures.
I'm all about like building up your knowledge base, building up your mind, building up your spirit, and just slay the day.
We're always looking for people to come along and help us with our journey as well. We can also contribute and help them develop their skills.
Thanks for having me. This is super cool.
Yeah, great. No, it's been awesome.
It's an honor to be here. I appreciate you guys.
Awesome. Thanks for having me. Hi, Haley. Thank you. Good stuff.
Chris, I'm so honored to spend time with you live, teaching thousands of real estate agents how to build their brand and not be a commodity.
All right, we're live. You're muted.
I'm mute. Welcome.
We're live. Welcome to Invested Agents Presents Real Estate Hacking Live.
Awesome. So today we have 6 amazing guests that will be answering the question, how will blockchain technology impact the future of real estate?
This is going to be a great topic because it's very, very new, very hot, and educational for me, selfish plug. But before we get started, if you haven't joined our real estate community, you can do so. It's free. Go to investedagents.com/community. If you're watching this live, put comments, share your thoughts below in the comments, give us a like, give us a share. And if we got questions at the end, maybe we'll get a chance to answer them. If not, we'll definitely do it post-production. So Jamie, who's our first guest?
Well, let's just start it off with our first guest. We have Sam Grossman. So a little bit about Sam. Go ahead and bring him up. Hi, Sam. Thank you for joining us.
Thanks for having me, guys. I appreciate it.
Sam is the managing director at Fairchild Acquisitions, and as of recently became the managing director of real estate services at Inveniam. Is that
Inveniam.
Right? Inveniam. There we go. So thank you so much for joining us.
How you doing, Sam?
I'm doing good. I'm trying to get used to all the different windows popping around, but all good.
Yeah. This is the little Brady Bunch experience that I guess COVID kind of threw us into, but thankfully getting in person. So how is blockchain going to change the real estate world? How's it going to impact the real estate world?
Well, I think it's already impacting it. I mean, at the end of the day, what blockchain technology really does is it leads to a few things. So for us, the reason why I joined Inveniam is what it does is it creates transparency. How does it do that? Well, it credentials data, right? Verifies data. Blockchain, what does it really do? It's just saying that, this document, belongs to this person, this building, whatever it may be. It creates real data that allows you to make real decisions on real information, expedites those decisions, makes it more efficient. But at the end of the day, really, it's transparency. That, to me, that is the key. Sure, eventually you can talk about how it creates liquidity, how the tokenization of real estate provides liquidity. But I think that's, next stage, next phase. For right now, I just think it's helping provide accuracy and transparency.
How do you see it impacting the actual closing process, documents, recording, acquisitions, dispositions, refinancing, that kind of stuff?
Well, I think it definitely it can be a game changer. Obviously, you need some regulatory changes to allow that, but I make the example of a notary, for example, right? The closing documents always need a notary. Well, a notary really is a person that you've never met before, that you're handing your license to, and they're saying, looking at your picture and saying, okay, yeah, that is Sam Grossman. He's going to sign it.
Yeah, it's real legit, right?
Real legit. So if I were to tell you we could use blockchain technology to make that process a lot more accurate, not to mention expedite the closing process, I don't think there'd be a lot of people in the room that would say, no, I don't want to do that. Again, it's the same concept of accuracy. And I think that, that really at the end of the day is what blockchain technology can bring to real estate across, every facet, whether it's a closing, whether it's a transaction, whether it's a buy or a sell. That's really what it has the ability to do, is that it can verify both parties. It can replace, the proof of funds, the POF in an offer. It solves, in my opinion, a lot of the back and forth that prolongs the transaction itself, whether it's the negotiating or actually the closing itself. The contracts, I mean, you got smart contracts now. So, the days of handwriting and showing up to a showing with a blank offer, well, it's kind of a thing of the past, right? So DocuSign replaced a lot of that, but I think blockchain can add to that just a whole nother level of security and clarity.
Do you think it stands to replace title companies, at least as we know them now?
I don't think blockchain replaces anything. I don't think it's like I say all the time, Inveniam isn't going to replace the app folios, the real pages of the world. It's going to enhance it. Blockchain has the ability to enhance, not replace. And I think that that's a key, factor for everyone to understand, is that it doesn't necessarily need to replace to make things better, to improve. It can disrupt in a good way, right? So blockchain is disruptive, but it's disruptive in a good way. And why is that? Because it disrupts the nature of the industry in that it can solve its inadequacies. Mm-hmm. It can just make things more efficient and more effective. Listen, I was not a believer. I was a client of Inveniam before I, had a position with it, before I was out there, selling the platform and selling the concept of blockchain. 6 months ago, I didn't know what blockchain was. I didn't know what, crypto was. We all know what, people think when they hear those words. I don't utter those words anymore. I try to stick to blockchain. But, it's really just a token. And, what's a token, right? It's a digital verification. So everyone in this world is really trying to get clarity, is trying to get a better way of getting from point A to point B that's cost effective, but allows them to, make that decision more efficiently with better data for a better outcome. And to me, that's what blockchain is. And I
was really with you. And you can go back in threads where I was making fun of Bitcoin and crypto. And just humbly speaking, it was a lack of education. That's just one facet. Blockchain's really the highway that those what would you call them, features travel on. So blockchain is the big apple. From a platform standpoint, where do we need to get to where we can start buying tokenized securities, actual real estate, just like you would a stock trade, like where it's seconds, no delay, and it's that seamless from an end-to-end like user experience? Well, and we got like 60 seconds to get that in.
Okay,
Please move quick, but go ahead.
First, I'd like to make it very clear. I in no way am an expert in talking about anything securities wise. And if you're asking me my opinion of the next step of how tokenized real estate works, it really is from a refi standpoint. It's tokenizing an asset that you already own. It's recapturing equity. It's refinancing capital stacks. I'm not a proponent of raising money to purchase real estate from a tokenized standpoint. I believe that the proof of concept and the education to the market is imperative to do it the other way around. I think you can tokenize assets that you already own and provide liquidity to your current investor base.
All right, sounds good. So how can folks reach out to you?
I think my contact info is below. LinkedIn, Sam Grossman, Inveniam.io. My email is sgrossman@inveniam.io. And Chris, thank you for doing this and look forward to try to do it again.
Absolutely. It was a true pleasure. Thank you, Sam.
Thanks guys.
So much. All right. So next we have Gabriel. We can bring on Gabriel. Gabriel Sadoun.
Hi, guys.
Hi, thank you for joining us.
Thanks for having me.
Gabriel is a business development associate at DigiShares. He left investment banking to take part in the disruption that blockchain is bringing to real estate. So welcome.
Thank you. Thank you so much.
How you doing, Gabriel?
Great. How are you, Chris?
Doing well. We had a really deep conversation a few weeks ago about, I'd say maybe 102 or 201 level conversation of securities and real estate. So blockchain, how's it going to impact real estate? What are you seeing?
Absolutely. So when people think of crypto and blockchain, I think the first thing that comes to mind is Bitcoin, which is aspiring to be a new type of currency and a new store of value, like digital gold. But what really gets me excited about blockchain is smart contracts. So a smart contract is a self-executing contract in which the terms of the agreement are written into lines of code. So instead of having a Word document with sentences and an e-signature, you actually have lines of code that are automated. And this creates an extremely trustworthy system because the code is present on a decentralized blockchain network where the transactions are trackable and immutable. So you cannot hack a blockchain. What this does is basically enable a system of trust without the need for a human being verifying a transaction or a stamp of approval from a centralized entity. And this automates a whole bunch of processes. And that creates a new investment ecosystem where many more people can participate. So it's basically democratizing access to real estate to a whole new class of investors, retail investors. Because basically real estate tokenization is just the creating smart contracts which represent ownership in real estate. And so you're lowering the barrier to entry. You have lower minimum investment requirements. Today, it's usually you have to invest $25,000, $50,000, and you have to commit for 5 to 10 years. Well, this is creating liquidity and lowering barriers to entry, enabling more people to participate.
All right, so you kind of went into the STO, securitized token offering area, and this is what excites me, especially how it relates to commercial real estate. What exactly, so the folks that are offering a token, the sponsors, they're offering a security. What are the benefits to the sponsor that want to go that route, or whether it's now or in the future? What are the benefits to going that versus the traditional type of security offering?
Absolutely, that's a great question. So because you have a system which is now liquid, so real estate investments are now liquid, you're basically there's no more illiquidity premium. So today, because you're investing over a 5 to 10 year period where you're going to be locked up in the investment, as an investor, you're requiring a lower valuation or higher returns, and that gap is called the illiquidity premium. So by making real estate investments liquid, real estate developers will capture more value and see higher valuations for their assets. And it's win-win because, on the other hand, average Joe investors like me can participate in deals that we wouldn't have had access to. So it's really a win-win situation.
So is that valuation because you have a greater pool of investors that can now participate? So like a private equity versus a public equity, like something on the stock market. So are you suggesting that because of it's more liquid, it acts very similar but not equal to a public security, that you're effectively able to get better returns on the sponsor side because you have a greater pool of investors. Anytime you have a greater pool of investors, the returns for the end investor may end up pushing down, and therefore increasing the overall project's profitability.
That's absolutely correct. And so there are two ways in which you could go forward. And to continue that analogy with public markets, so you can choose to have your own internal OTC marketplace with your investors that have participated in the primary offering. Well, they can trade amongst themselves with something like the DigiShares, a bulletin board module that we provide. Or you can decide to plug into a digital NASDAQ, let's call them, which are the new exchanges or alternative trading systems that are being set up.
Would this be like a Coinbase?
So Coinbase currently, they only have a cryptocurrency exchange.
Or say like an OpenSea?
I'm not familiar with OpenSea, but the current examples are T0 and INX,
okay.
For example. So it is just like a Coinbase, but for security tokens. And actually, Coinbase is probably going to join the party soon. So that is correct.
Yeah. So you're just open. It's a platform to where you can now trade these tokens, which really are just a representation of the actual asset, or at least your interest in the asset, where you can trade them freely and easily, as opposed to now you gotta. I mean, it's a liquid. You got to find someone that's willing to buy it, and there's not really a market for that. At least it's very inefficient. Does that sum it up?
Yeah, absolutely. And so, these platforms, they have hundreds of deals in their pipeline. So these marketplaces are really gonna grow very quickly. And if you want to participate either in those marketplaces or create your own OTC marketplace, you would need a token issuance platform like us, which will create the smart contracts and which will enable people to invest, do the KYC, on-ramp US dollars, get paid distributions in stable coins or US dollars.
So where are we going to see, and we got like 2 minutes left, where are we going to see from a platform standpoint, and then this is something I asked the previous guest, what are we going to see over the next 18, 24 months from a platform standpoint that's going to help make these type of transactions as easy as it is buying a public stock, where you can do it in seconds from a user experience? Because right now it's very clunky. There's a lot of mechanics, and they're usually different entities or businesses, and they connect, but it's a clunky process.
Absolutely. So these these new exchanges and alternative trading systems, they have instant settlement. So T0, it's actually a play on word with the T+2 system today. So it's the transactions in public markets today are settled 2 days later. And so it basically means that you're with the blockchain, you're settling
instantly, microsecond.
Right, exactly. So these marketplaces will, some of them already exist. More will come in. They will grow. You'll be able to set up brokerage accounts on them, just like on Coinbase or on Robinhood. And the liquidity in the market will grow substantially, and we look forward to being a token issuance platform and cap table management tool, to enable real estate developers and funds to plug into all of that.
Yeah, it's gonna be fun. It definitely has me very excited. So yeah, how can folks reach out to you, Gabriel?
Yep, LinkedIn or by email, gs@digishares.io.
All right. Thank you so much, Gabriel.
Thanks, Chris.
Thank you. All right. Great stuff. This is a great topic. So let's bring up our next guest. We have Mohsin Masud. So a little bit about him. Thank you for joining us.
It's an absolute pleasure. Thanks so much for having me. So go ahead.
He is the CEO and founder of AKRU. He is an expert in tokenomics and has over a decade in real estate investment experience. His education background includes York University, Harvard Business School, Harvard University's Graduate School of Design, and Said Business School at Oxford. So, wow, that's awesome.
You guys make me sound super knowledgeable, what I may not be. So I like to believe I'm the dumbest guy in this conversation, but go ahead.
Yeah, it's funny. The smartest folks typically say that. But yeah, hey, glad to have you on the show. You've got a huge background in not only real estate investments, but in the blockchain crypto space. How are you seeing blockchain technology impact real estate over the next decade?
Chris, I think there's a few things that come into play. It's one of the things that is key is the fact that understanding the difference between blockchain as the technology versus interchangeably being used for cryptocurrencies as well. Majority of the times people start thinking, hey, when you're talking about blockchain, there's going to be crypto involved in some way or form. As Sam talked about it, and then the person before me from DigiShares as well, it's a smart contract. It's a coding that really makes a difference. It's a distributed ledger that plays an immense role in completely changing the industry as we look at it today. So real estate being completely changed from a transactional perspective, from a data perspective, from the perspective of land registries, and then also from a trading perspective. And that's what we focus on, is fractionalizing real estate and giving access to people, democratizing this space, and bringing it making it more and more accessible for people who don't have access to it right now.
Yeah, so blockchain, as you were describing, it's the foundation. Cryptocurrency is a feature on that highway, on that foundation that's built, NFTs, securitized tokens. So there's a lot of things, and there's probably a half a dozen or several hundred other features that we just we haven't thought of yet. But let's go into STO. Since you're in investments, knowledgeable in STOs, this is what has me excited. How do you view the STO or how is the STO process different than the traditional security process?
Yeah, so there's a lot of efficiencies that come into play when we start using blockchain and start utilizing STOs or security, or start bringing on new security token offerings. Those efficiencies include the speed of transactions, the immutable nature, bringing the trust in the trust environment, the instantaneous transactional process, and then added features that come into play with it as well. Traditionally, when you're looking at a real estate deal in the alternates world, you're looking at signing off on large PPMs and disclosures, and you have to wire money to an escrow company. You have to go over a whole bunch of paperwork that you have to sign off on in the form of operating agreements, and then receive your K1s and deal with all of that. And then from the sponsor side, it's a similar process where you have to not just create those documents, but then also have to manage them, investor relations, and all of those things make it a very tedious process. Once you have STOs, or once you start utilizing STOs for those offerings. And instead of going for traditional offerings, we go towards security token offerings. You're talking about one-click investing. You're talking about instantaneous transaction settlement. You're not waiting on escrow periods. You're talking about fractionalizing it down to as small a number as you want. St. Regis is down to start off as $1 a share. Some others may have it up to 10,000 or 1,000 or 500, depending on how you want to value that asset. So STOs really change the game in terms of the speed of the transactions, the transfer agent aspect of it, and other intermediaries, which you don't really need from a technical perspective anymore. Now, from a regulator perspective, you still need a lot of those intermediaries still in place to make the product function within the given circumstances that we have for SEC and FINRA and all the other 3 and 4 letter regulators out there.
Yeah, I want to get to tokenization and fractionalization, but first, from a platform standpoint, how long is it going to be before we get there to where it's as you describe, where it's one click done, as opposed to like now you have the platforms, then you've got the currency, which can be crypto versions or fiat. Then you have keys and public wallets, and like it's very clunky. We'll fix that. But
I like to believe we fixed it. Right, I like to believe we fixed it at AKRU, and that's how we set up AKRU.
Talk about it.
So look, the reason why Coinbase is the single largest exchange out there for cryptocurrencies is because of the user experience for it, right? And there's no other way that you will get larger user adoption till you don't really solve for that true experience, where you don't have to deal with those private keys and public keys. You don't have to download all these apps and all these wallets, and you don't have to manage these cold wallets or these cold storages in terms of these USB keys like storage systems and stuff. You have to create a platform, and that's what our thought process was when we created AKRU, where it's a seamless process for users to sign on, just like they would in their email address, just like they would in their Gmail account or anything else. And you're able to onboard your money on the platform just like you would on Robinhood. You connect a bank account and you transfer funds in your Robinhood account. And now when you want to invest, you just pick and choose the asset that you want to invest in. And you say, buy now. And that's the end of that transaction. Whatever disclosures are associated with it, all those requirements are met within the data vault. So for us, we use Inveniam as a source of truth on our data. You had Sam talk about it earlier today as well. There are true data vault service that we utilize, as well as data integrity service that we utilize. And through that, we're able to provide the disclosure at the time when someone clicks on the buy now button. They just click through the disclosures, and they're able to go ahead and they're able to purchase those tokens, provided they have fund setting in their AKRU wallet as well. Now, we're not using any kind of cryptocurrencies. We're not using any kind of stable coins per se. We don't want that regulator risk or that volatility risk that comes on from using those kind of coins. We're using purely fiat, and at the same time, we're keeping the entire transaction on chain as well. And that's the unique aspect about AKRU. How do we ensure compliance on it? All of that needs to happen on the back end. Whether you're using Gmail and that uses blockchain as the underlying tech, you should not have to deal with that. Do you know what kind of TCP/IP service you're using on your internet connection? No, right? And that's the thought process of, if you want to use blockchain as a general purpose utility and you really want to benefit from it, that's the only way you're going to get mass adoption and you're going to be able to solve for it. And that's what we work towards, and that's how we developed our platform. And that's, those are the problems that we solve for, both from a sponsor's perspective as well as an investor's perspective. If I need my tax reporting docs at the end of the year, I shouldn't have to go looking in my email or in my mailbox or running through my mail. It should all be available in one central place. Just like on Robinhood, you get all of your tax docs at the end of the year just in your inbox within the Robinhood app. It's the same thing on the AKRU platform. You get all your reporting docs all within your own dashboard. Where do you get all of your distributions? Those quarterly dividends that you get on Robinhood. Similarly, on AKRU, it's the exact same thing. They automatically come into your account on AKRU. It's not like, oh, I got to go claim these on a third-party website. Now I want to trade this, so I'm going to go on a different website, and I'm going to go to a different ATS. You want to sell your token? Click on list token now. And this is
it's making it as easy as Apple Pay, like literally just throwing your phone up, done, or the little chip reader. Because when I bought an NFT, it was like I had to get the Coinbase account, and then I had to deposit, and then get ETH, and then I had to transfer it to a MetaMask, and then I connected my MetaMask to the website, and I've done really good on that deal, so I'm happy. But all right, real quick, we have 60 seconds. Tokenization and fractionalization, how is that going to impact cap rates in commercial real estate?
Look, when you're opening up the market to a larger public, you're going to see cap rate compression for sure, which means you're going to have that increase in the value of the asset. What that in turn means is when you're moving an asset from a private market to a public market, and I know someone already had this conversation a few minutes ago as well, you're adding a premium on traditional securities. You see somewhere from a 15 to 30% liquidity premium that goes on moving from private to public. In this case, it's real estate. It's never going to be a true public market transactional process. It's always going to be an OTC product, and that's how we've set it up. But the premium is still there, which in turn means you're going to have cap rate compression. You're going to have higher prices. You're going to have more demand, and more people are going to be able to buy into at a much smaller value, creating that whole fractionalized ownership concept, as well as democratizing the space and letting everyone invest into it. Even within the accredited investor space, there's a whole chunk that doesn't currently have access to true alts. Their only options are going into a BlackRock fund and having 50K locked in there for the next 5, 7, 10 years, which they may not want to do because you may need access to capital, and which is why people don't choose to do that.
Yeah, that's the most exciting thing to me. Well, thank you so much, Mohsin. How can folks reach out to you?
Well, best way to reach out is AKRU.co or on my LinkedIn, Mohsin Masud. My email address is mmmasud@AKRU.co. Happy to chat with anyone who ever needs any help on this topic. Thanks so much for having me.
Absolutely.
Have a good one.
Take care.
Thank you so much. All right, let's start with our next guest, Chris Lisac. Hi, Chris.
What's going on, everybody?
Go Astros.
Go Astros. Hey, had to wear the hat. We're in the World Series. Got Game 6 tonight. We need all the support we can get. Although my hat's a little crooked here.
Yes. Well, thank you for joining us again.
Yeah, glad to be here.
Let me just give a little background about Chris. Chris is the founder of Blackhawk Equity and a licensed real estate broker in Texas. He has over 20 years of real estate experience from investing, multifamily operations, property management, and sales. So welcome.
Good to be here. How is everybody?
Doing good. We've talked a little bit about this topic. I didn't quite know that you were pretty deeply involved in the whole blockchain crypto world until we talked most recently. So how do you think blockchain is going to impact real estate, or especially over the next 10 years?
Well, I like to say it's going to change everything. And I think it's going to change the way real estate's being done. I think that we're going to see a shift in transaction times, the way it's transacted, the way it's financed. One of your earlier guests, he didn't think that it was going to affect title companies. I think it's going to disrupt title companies. I think just the whole face of the real estate landscape is going to change. Whether you're buying a house, investing in real estate, whatever it is, whether you're pulling money, no matter what you're going to do in real estate, I just think it's going to change because the ability to fractionalize and to tokenize and to transact instantly and to be able to scan a QR code on your phone and transact something, to go to an exchange or a swap and be able to swap something out instantly. I think that changes the whole game. I mean, your last guest talked about cap rate compression. Your cap rates are going to, change drastically because, not just the premium of moving from private to public, but also like you're going to look for value. you're getting 0.1% in the bank. You're getting 1%, 1.5% on a 10-year treasury. But you can instantly go transact in something, and you're going to be able to get, 2, 3, 4, 5% on it. And someone says, "Hey, I need to hold my money somewhere for 8 months, but then I need my money back in 8 months." Well, you can go to an exchange and you can make that, that trade and hold it for 8 months and then get your money back. So it's going to change. Yeah, it's going to change, the way estates are planned. I know I'm just kind of going here, but the way estates are planned, you got to think about states now. Someone passes away, you probate, you do all these other things. It can take 6, 9 months. But if someone's invested in a partnership, they don't have to disrupt the partnership to get their fractional ownership out of that partnership. That can be transacted instantly. Like, everything changes. It's going to change everything.
I agree. On the fractionalizations, you talked about basically you're globalizing a local asset by the secondary market. I mean, there's still going to be SEC requirements, depending on how these things are structured. But once that timeline, take a 506C for an example, you have to be an accredited investor to participate. But after 12 months, in the U.S. But after 12 months, that security can be sold, and don't take any of this as legal advice. But but at that point, when you have a liquid secondary market like blockchain can offer, and platforms as they're developed can offer, now you have a global pool of investors, as opposed to right now, you kind of have to know someone. Unless you're going on some of these, like Realty Mogul and some of the crowdfunding platforms. Basically, you have to know someone, but now you don't. And you can participate in the Sears Tower in New York and buy your 0.005% of it. But New York City has a huge boom over a 10-year period. And hey, you get the cash flow along that time period. You just had to sell it in 18 months. Take your equity, go out and do whatever you want with it. Do you think as that evolves, it creates a risk in the near term of a potential bubble? And not to get you to speculate, but that maybe investors should watch out for that?
Yeah, that's with anything. You're seeing it with some of the coins, you're seeing it with NFTs, and I think it's going to depend on how fast we adopt the currencies, right? Or the tokens. If we get a slow adoption of tokens and there's not a mass influx of money, you won't see that happen. But if everyone catches it and it gets a lot of publicity, and there's a lot of people that are rushing to the space, and there's not a lot of product that's available, a lot of product that hasn't been tokenized, then I think you could see bubbles form. We already know there's going to be some cap rate compression. You could see mass fluctuations in that. The one good thing that you have when it's with real estate versus with other assets is if you're buying into a cash flowing asset, that cash flowing asset's still going to be there. A lot of this other stuff, it's kind of like
Dogecoin doesn't have intrinsic value.
It's
300 unit apartment complex. Like, people still live there and they're paying rent.
Yeah. Well, even think about publicly traded companies. You go into the stock exchange and you can go buy a publicly traded company. Well, how many booms and busts have we seen in the stock market where, what was it? WorldCom was $100 and something billion bankruptcy, and Enron and all these other companies. You can have a bad operator on some real estate, but also usually built into those partnerships is, what do we do when there's a bad operator? Can we remove that operator? The building's still there. There's cash flows still there. Something happens to the building, storm, fire, something like that. We got insurance. That's the thing about real estate is we can smooth out a lot of those rough spots that you might see in the other market. And when's the last time an apartment complex spiked 400% in value overnight and then dropped, 50% the next day? Doesn't really happen. There's a couple houses down the street that probably sold for $100,000 more than I thought they should have, but that was short lived in a boom. So yeah, I think like I said, if you have a limited amount of product and you get a lot of hype in the space early on, I think you could get a lot of money rushing in. But that's going to depend on the structure of the deal too, because if you don't have if you don't have it set up to receive overseas money, if you don't have a Reg A, Reg A plus, Reg CF, some of those things, you may be limited. Some of the governing documents from the transaction could limit, the buy-in size. So you probably have a few things that could help, prevent those fluctuations. But at the same time, look at the NFTs. Most of the people buying them, if you're paying $1 million for something, you got the money. So you're going to qualify for all those things if you're a wealthy investor. So we'll see how that shakes out.
Yeah, in some sense, it's kind of like the Wild West, but you're still dealing with SEC, and there'll be further regulatory action taken on to protect the consumer. So that's a good thing too. How can folks reach out to you, Chris?
I'm all over social media, Instagram, LinkedIn, but also my site back here, chrislisac.com. You can go there, check out some info. We got some blogs about tokenization, some different conference stuff we've done on tokenization, blockchain, real estate. So people can go find some info there.
Love it. Thank you so much, Chris.
Thanks, man.
Go Stros.
Yeah.
Thanks. Awesome. Okay. Our next guest is Michael Flight. Hi, Michael.
Hi, how are you doing today? And hey, Chris, how you doing?
Doing great. How are you?
Thank you so much for joining us.
Now that I'm with you two lovely people.
Thank you for joining us. A little bit about Michael. So Michael is the CEO and founder of Liberty Real Estate Fund, the world's first net lease security token. He is a blockchain and security token evangelist with expertise in commercial real estate. Michael is also co-founder of the Blockchain Real Estate Summit and the Blockchain Real Estate Meetup. So thank you for joining us.
Thank you again.
Nice talking with you, Michael. So you're a very experienced real estate investor in the commercial arena, and you're actually doing it from a blockchain standpoint for STO, security token offering. So you have one for your current fund. How do you see blockchain changing the game and impacting the future of real estate?
Blockchain is going to change the impact of blockchain is going to impact the entire financial system. So blockchain, just like the internet, was a way to transfer value or to transfer communications instantaneously anywhere in the world. So before you had to pay an insane amount of money to make a long distance call, now you can, we're doing this free over the internet, and, you can do instantaneous communication through email and all the rest of that stuff. Blockchain facilitates the instantaneous transfer of assets and money. So now you can, I can, just send money instantaneously to you, Chris, and you'll know that you have it. And I don't have to go through a bank. We could just go directly. And that's the same thing that blockchain is going to do. Blockchain, so, for example, investing in real estate, it's going to change the game, because right now, if you're a syndicator, you're out there doing things with paper, you're out there, doing things with, direct. And later, when, a lot of this stuff gets really clicking and you'll be able to trade it. So you'll, number one, be able to crowdfund a lot more. Number two, you'll be able to have a better relationship with some of your investors, because you'll be able to send out communications to all your investors, and they get that instantaneously through the smart contract, and they get it delivered to them. But the other really cool thing is that it's going to change title. It's going to change probably even the way, houses are recorded. So at some point, houses will be up on the blockchain. They might be, houses would be considered an NFT. I'm not sure if they, will call them an NFT in the future, non-fungible token. So there's just every part of the financial system is going to be impacted. And, I believe real estate is going to have a tremendous amount of benefits because of blockchain.
How soon do you think it'll be when we have the platform, and not just the platform, because there are a few folks, and we had some of them on earlier that have a platform and have a well integrated platform, or so they claim. So, how soon do you think it'll be for the secondary market to mature enough to where we start seeing the theoretical liquidity that blockchain is going to provide real estate? That we start seeing that in real time?
Well, first, I don't think that you're going to have instantaneous liquidity for every asset. Just like for publicly traded companies right now, you don't have a bunch of liquidity in really small companies with pink sheets. They're thinly traded, and I believe that more than likely is going to be the same thing with any type of real estate investment, unless it's a really large fund. Unless it's a worldwide fund, or it's something that you can there'll be liquidity makers, and there'll be people that will participate in actively trading it. What you'll probably see is that the liquidity that you're going to get is that you can take your share, unlike in a current paper syndication. You could take your share and potentially trade it to somebody else. So if I had $50,000 of your deal, I could come and go to somebody else like Chris and say, Chris, are you interested in, buying a share of this? And if he says yes, it's like we can trade directly. You could list that with a broker dealer. Then you can list it with these things called automatic trading systems, which are ATSs. They're a step down from exchanges. And then I think if you get a large enough asset, those will be listed on security token exchanges. And more than likely at some point, security tokens will also be traded on crypto exchanges like Coinbase and Kraken. So you're just going to have a lot more options for liquidity. It's not necessarily going to be super huge instantaneous liquidity. Mm-hmm. The other thing that security tokens will allow you to do is you'll have the ability to have liquidity because you'll be able to borrow against your share. So at some point, if a lender gets comfortable with the net asset value of the fund or the net asset value of the property, you could potentially put your share up in and borrow against that, which is insanely difficult right now to do in a normal syndication. So it's just, and then there's a lot of stuff that my imagination can't come up with, but the guys in the DeFi world, the guys and the women in the DeFi world will come up with.
Yeah, they'll figure it out. So should sponsors go down this rabbit hole of creating STOs now, or should they be more focused on, obviously, number one priority should be running their business and running their project. But outside of that, go in the traditional security offering and maybe put the framework in place for an STO at a later point?
Every sponsor that's doing real estate syndications now can easily just talk to their accountant and talk to a securities attorney that knows something about digital assets and knows something about issuing security tokens. And they can put the language in their offering documents because they don't have to immediately issue it as a share. But if you start like putting in the legal groundwork so that it allows you at some point to list the asset and to make it a tradable asset, you don't have to change anything with your business model. You can continue to learn about how security tokens are going to go, and you can see if it's going to be right for you. And so then in the future, like next year or 5 years down the road, you can say, oh, we've already got this in our offering documents. So I don't have to go back to, my 20 investors or my 100 investors and say, we're going to make a change to the offering document. So it's already in there. And that's the easiest thing you can do to start preparing for, how this shift is going to take place.
It seems like at some point in time, everything's an STO. It just becomes, that's just the way you do it. Now that may take 10 years, 15 years.
I believe investors are going to demand it, so I believe once investors see, how much other, opportunities they have. And then the other key thing is when you want a security token, you own your asset. That asset follows you around the world. So it's not like it's locked up in, a file cabinet. It's not like I have to, call up a sponsor and say, oh, I'm moving my address and, can you send the checks down to Costa Rica? So, those assets are your assets. You control them, you own them.
Yeah. It's like logging into PayPal and changing your address there. You don't have to talk to PayPal. You do it through the system.
Right.
So the internet commoditizes everything. This Web 3.0 blockchain era is going to do the same thing, but in a more escalated fashion. You mentioned something earlier that brought this thought to mind. How do you think blockchain and tokenization is going to impact the brokerage side of commercial real estate?
Right now, a lot of people think that the play is actual tokenizing of assets, and I don't see that. So I don't see like somebody coming in and tokenizing every property. I think it's going to be expensive. I think that's going to be something more that's going to be done at the title level. I think that, right now the opportunity and the easiest opportunity is to securitize funds. And then at some point you can tokenize assets and put them on the blockchain. I really don't have any opinion on how it's going to change the brokerage, because I really haven't given that a lot of thought. So honestly, I can't tell you from a broker standpoint, because I've really focused on the cryptocurrency part of it, the digital asset part of it, and the own your assets part of it, and financial, and the even greater financial freedom that you're going to get with controlling your assets. So I'm sorry, Chris, I don't really have a great answer for that.
You answered it. I appreciate it. It's these 10 minutes move by quick. How can folks reach out to you?
They can get a hold of me at libertyfund.io. That's libertyfund.io. If they're interested in blockchain real estate, they can come to the blockchainrealestatesummit.com website or the blockchainmeetup.com website. And that has, we're actually building it out more now, but we're going to do the Blockchain Real Estate Summit again in September in Austin, Texas. And we are in the planning stages for another blockchain summit down in South America. And more than likely, we're going to be hitting a blockchain real estate, some sort of thing in Europe next year too. So if people want to sign up for our newsletter, we'll keep you aware of the events. They can get, actually the summit that we put on was designed so that somebody could go through and kind of learn how to do a complete tokenization. So, and we're all about education. We think that the more people list on chain, the more liquidity you will have, because everybody will be more comfortable with it.
I love it. All right. I look forward to seeing you, if not sooner, at the next summit.
Thank you very much.
Thank you.
Thank you. All right. Our next and final guest is Victoro. Hi.
Hey guys.
Can
you hear me?
Yes, we can hear you.
Awesome.
Okay, let me just give a little bit of background of Victor. Victor is the CEO and founder of Reno, a commercial real estate tokenization and lending company. He also works as a committee member of MakerDAO's Real World Assets to improve the process of integrating real world assets with the DeFi ecosystem. So, awesome.
How you doing, Victor?
Thank you so much.
I'm doing well. Thank you. Thank you for inviting me here.
Absolutely. Yeah. Thanks for joining me. So the question we've been talking about this hour is how blockchain technology is going to impact the future of real estate. So how are you seeing it?
Yeah, it's my vision is not much different than the vision from the previous guests. Basically, what I think differently than, for example, what Michael mentioned, is that I'm seeing an option for instant liquidity, though, instead of having sort of pink sheet type of market for the tokenized real estate. But this instant liquidity is going to come from services that are providing artificial intelligence combined with tokenization to provide valuations and instant buying as like instant market makers that are going to provide instant buying, instant lending based on automated valuations on the assets. We are seeing that in the residential space right now. Companies like Opendoor, Zillow, which Zillow are not buying right now, but Opendoor are still buying actively based on the algorithms and data. So what I'm seeing, as future for real estate is that such automated buyers are gonna be the main source of liquidity, and they're gonna provide some sort of floor. So that at any given point of time you can liquidate the asset at this price, but you also could participate on secondary market like ATSs and even peer-to-peer transactions where you can liquidate your current asset.
Yeah, so if you want to liquidate it at value versus, hey, you need money tomorrow or in an hour for whatever, I don't know, maybe you got heart surgery, and then you just put it at a discount where you're obviously getting a much quicker transaction.
Exactly, but we're gonna see both options available, so people are gonna become more and more comfortable dealing with it because they know that they can liquidate at any given point of time. We're definitely gonna see much more liquidity for LPs, typically in both equity wise and debt wise. What we're building, by the way, in Reno is exactly something like this. We're automatically evaluating assets by using data, commercial properties, and we are using that in order to be able to offer instant loans for LPs, and even to replace banks and so on in future, because the tokenization itself has certain advantages, but also certain issues that need to be resolved in order to provide further liquidity down the road. And one of that is, if we're talking about more traditional deal setup, not the GP-LP relationship, we're having a bank that is restricting change of control, so we're not going to be easily be able to change ownership without bank's approval. So we need to overcome that. Bank or current traditional lenders' approval are having those restrictions in place in pretty much every mortgage document.
Yeah. Well, I mean that's another evolution that'll it'll take some time to mature, or new banks, or new banks come along that and new lending institutions come along that are geared towards that type of product. How do you see the use of creative smart contracts playing out in the tokenization of real estate?
What do you mean by creative smart contracts?
So I mean, you can put anything you want in these smart contracts, which can include, say you own a very unique piece of historic property in your town. It's been a rental property forever. I mean, you're retiring, kind of like downsizing, and you just have to sell it. But you can actually put that in the smart contract that maybe you get 0.5% of the transaction every single time it's sold in perpetuity. Then that could go into a trust and provide for your family. What have you seen? Or what are you seeing? And it doesn't even have to be for real estate, because there's a lot of comparisons just in the normal business world. But yeah, what are you seeing?
I got it. So basically, smart contracts are going to allow people to structure deals that weren't possible today. And I mean, that what you said is a pretty good example. Right now, it's happening in the NFT world, where sponsors or the initial owners or creators are able to benefit in long term from the sale of the asset, the appreciation and so on. So that could be incorporated in the smart contract, and easily they can, the initial creators or the owners that are putting the initial deal together could be really creative and create something that is unique on the market. I think that's the future. I think that smart contracts could be designed in a very, very unique ways that are going to allow people to benefit much more than that. We're going to see also, in my opinion, other yield farming solutions or staking solutions for, where people are buying tokenized real estate and they're able to stake it to increase the amount of return they're getting, in a sense. And we're going to see plenty of those down the road. I'm pretty sure that we're going to be surprised by very smart people jumping into that space and creating new models. Currently, I'm seeing huge development in that area, and I'm seeing a lot of people trying to figure out how to bridge DeFi space and the DeFi space and the traditional finance. So I think
it's a fast moving industry and market. I mean, AOL was king before Yahoo was king, and like then this Google company came along. So you just never know. Like for all we know, 15 years from now, like people will be thinking of Bitcoin like AOL. We don't know that. They definitely have a really good reputation today, and track record. But all right, Victor, how can folks reach out to you?
They could reach out directly to our website, reno.io. It's REINNO.io, or directly find me on my on LinkedIn. So I'm pretty active there.
All right. Thank you so much, Victor. It's been a pleasure.
Same. Thank you. Thank you, Chris.
Thank you. Nice to meet you. All right. So that is a wrap.
That was fun. It was fun.
Yeah.
It's the first time we've ever talked about blockchain and crypto and any of that stuff, at least to this degree. So
right.
I learned a lot.
Oh, I definitely got a better understanding, because whenever you were talking about crypto and all this stuff, I'm like, what are you saying? It's like a completely different language to me. I mean, so it was really good to listen to all of this and actually understand, or begin to understand. I know there's much more to learn about it, but so anyway, that is a wrap. Thank you to all of our guests who joined us. It was really, really fun.
Yep. We'll be back in December. We'll probably be talking about what to expect in 2022. Market predictions. So see you the first Tuesday of December.
That's December 7th. December 7th will be the next time. We are live. So join us and
see you next month.
See you next month.